It's been an unpleasant few weeks for you. You made it through at least, let's call it the latest trial. Shareholders reelected you to the board, and of those who casted ballots, 97% supported you. Can you breathe easier now?
You know, obviously deeply appreciate the support from the shareholders expressed today. Very much appreciate the support of the board of directors. I think John McFarland, our chairman, has been very supportive. But it's also important that I apologize to the shareholders and I apologize to the board. There is the investigation. My job is to run Barclays, and that's what I'm focused on. But it was a lesson learned.
So you can or cannot breathe easier. Does it feel like you've passed the test, an important test?
Every step along this journey has been, I think, it's hopefully a step to getting back to focusing on the bank and not focusing on the whistleblower issue. The lessons learned, and I also don't want to, there's an important investigation to be done by the regulators, and I take that very seriously.
Well, as you point out, you are under investigation for trying to chase down a whistleblower. It is a serious matter, in part because this is the first test for a new regulatory standard of accountability, the senior managers regime. You've explained the circumstances. You have apologized on more than one occasion. Let's begin, if we may, with a state of play. Where does the investigation stand at this moment?
It's in the beginning stages with the regulators.
Have you been questioned by either the Financial Conduct Authority or Prudential Regulation Authority?
I'm not going to talk about where we are with the investigation. I think it's going to take a period of time. I totally respect the process, and let's let the process take its course.
Any sense of that timeline, how long it may take before this matter is concluded?
I think it's an important review of the entire whistleblowing process at the bank, so I would imagine it'll take a fair period of time.
Months?
I don't know, but I think a fair period of time.
The objective, Jess, of the senior managers regime is to restore confidence in British banking. That's straight out of the FCA handbook. And because of that, I have to imagine you've considered the possibility that regulators use the whistleblower case to prove that the standard is a credible one, right? That there is accountability in the system. Maybe by making you a sacrificial lamb. Is there anything you can do about that?
I respect the regulatory construct in the United Kingdom. I think the Bank of England, the PRA, the FCA, I think executives should be held accountable. I think the senior managers regime is a very important piece of regulation in the United Kingdom. Since I've got here, one of my goals was to be very transparent with regulators. In many ways, we are partners in trying to avoid the next financial crisis. There's a very constructive dialogue between Barclays and the Bank of England and the PRA and the FCA. That's very important to us. So I respect the regulatory framework here, and let's just see how this all plays out.
If the, call it, unthinkable happens and you're deemed unfit to run Barclays, does the bank have a plan, a succession plan?
I've got the full support of the board. You saw the shareholder vote today. Let's let the investigation run its course and see what happens.
Fair enough. This was a mistake. You've said as much. The board has continued to support you. We heard that at the AGM. What I still can't understand, and I know I speak for other people as well, is what would motivate you to exercise bad judgment?
There are so many things going on in front of a chief executive officer of a bank with the complexity of Barclays. There are decisions taken every single day. I thought I was trying to protect a colleague who was vulnerable from a malicious attack, but I shouldn't have gotten involved as I did, and that was the mistake.
the people, let's just put it this way, your friends, your colleagues know Jess Staley to be passionate but even-tempered, as a person who prides himself on a high ethical standard and a high standard of conduct. Is that same Jess Staley also a person who is, call it, either a little bit vindictive, a little bit vengeful, perhaps a little emotional at times?
I don't think I'm vindictive, no.
So whatever it was that drove you to make the decisions that you made are not part of your character, if you will. It's not something people should be. You know, these are the questions that people ask themselves. Who is that guy? What's he really made of? So I'm just trying to get to that.
You know, I care deeply about the bank, and I care deeply about the people who work at the bank. One thing that I've witnessed during this whole period of time, just incredible passion that people have for the bank, and the notes of encouragement that I've gotten from, you know, branch managers across the UK has been quite touching. So I care a lot about the bank, but I've got to make the right judgment calls. I've got to conduct myself in a way that's only beneficial to the bank, and so that's my obligation.
The other question I have is the same one that you found so vexing at the outset of all this. Who would want to undermine not just Tim Maim, but also, by extension, you, right? All we know at the moment is what John McFarland said at the AGM, that it was likely somebody from outside the bank. I'm trying to figure out for myself who might be motivated to do that. Do you have any idea?
I'm not going to go there at all. Let's wait for those questions till after the investigation with the regulators.
And the other issue to ask about is whether the actions, to what degree you worry that your actions put a chill on the very people you need, in fact, to come forward. You know, one way of phrasing it is, why would anybody pick up the phone and call the whistleblower line if there wasn't a guarantee of anonymity?
The whistleblower rules are incredibly important for maintaining and regulating control of banks. It's very important that people feel comfortable to contact the bank or the regulators with full protection to talk about conduct issues at Barclays, and we're going to do everything we can to make sure. You know, we have a very robust whistleblowing program, and we're going to do everything we can to maintain the scale and depth of that program. And all signs are that there's been no change in
people are using it.
Absolutely.
And you've put safeguards in place. I wonder, have you put safeguards in place to make sure that people do feel comfortable using it?
Again, I don't want to get into the details of the process. Let's let the whole regulatory thing work. But whistleblowing is very important to this bank, and we respect it.
I've asked you a number of questions on this issue. None of them are comfortable. Before I move on, is there anything you want to add?
I'm good. No thanks.
Your restructuring of the bank is almost complete. By next quarter, you'll have reabsorbed what's left of the non-core business. I think it's probably a good time to talk about growth, something we haven't heard a lot of from you. You've had other work to do.
Yeah.
So give me a sense of what the next leg of Barclays' strategy is. Give me a sense of your ambitions.
Well, first, I do want to underscore the enormous lift that this bank has executed in getting out of these non-core assets, selling non-core businesses, closing the bank in certain countries. Just an amazing amount has been accomplished in the last year or the last couple of years. We will have reduced the footprint of this bank by anywhere between 30 and 40%.
Geographically?
A number of people, geographically, to a certain extent, assets. That's tough to do and keep a bank moving forward. We really look forward to. I think it's 62 days away from closing non-core and being the bank that we want to be as we go forward. It will be great to start thinking about growth again. We actually had an offsite of our executive committee about 3 weeks ago, and the discussion was principally around growth and where is Barclays going to be in the next 5 to 10 years. We have our basic strategy, which is this transatlantic consumer, corporate, and investment bank. We have a juggernaut consumer business in the UK. 30% of the payments across this country go through our payment systems every day. We have a very good consumer business in the U.S. And when we talk about Brexit, we have a very good consumer business in Germany, actually, as well. We're the largest credit card company there. But having that anchor consumer business in the UK is very important to us. And then having this global footprint for the corporate and the investment bank. It's based on the strategy that being diversified between wholesale and consumer is the safest place to be, in my view, for a large financial institution. So those that are arguing that let's separate consumer banks from wholesale businesses, my experience, at least in the last 37 years in finance, that's a much riskier proposition than allowing banks to diversify their portfolio being consumer.
Whether that be considered here or in the United States.
Yeah, I mean, one of my early meetings in the UK was with Andrew Tyree, who ran the Treasury Select Committee here in Parliament. A very, very smart politician. And when he and I were talking about Barclays and ring fencing and how the UK thinks about what they say in the United States being Glass-Steagall or separating wholesale, and he said that we should be very aware that in the ring fencing legislation passed by Parliament, what they have constructed is a single point of entry holding company with 2 subsidiaries. One subsidiary is a retail bank, essentially, and the other subsidiary is a non-retail bank, and in our case, it's very much of a wholesale business. Mm-hmm. And that's the construct that the legislation supports. So I think actually in the UK, there is a recognition that diversified business can be a healthy thing. What we have to do, and we have to ensure that we convince the regulators and the broader community that we can run an investment bank safely, that doesn't put the financial system of the United Kingdom at risk. But now let's see how we grow those 2 basic engines of our business, given what's going on with the global economy, given what's going on with regulation, given what's going on with competitors.
Do you still have work to do on that front, convincing or persuading regulators that you can run an investment bank, a wholesale business safely?
To a certain degree, yeah. Hopefully we never forget what happened in the financial crisis, and investment banks, poorly run, can get into trouble for sure. So we do have to convince, I think, and constantly convince that how we are running this investment bank is in a safe and sound manner. I think we do. I think the amount of capital that regulators have required us to put against these businesses is I think. And it may have been the governor here, we have 10x the amount of capital against our risk-weighted assets in that part of the business than what we had before. So the capital is there, the liquidity is there, but we need to articulate how we run these businesses from the market side to the underwriting side in a way that convinces people outside of the bank that we are doing this safely and soundly.
So let's discuss what you discussed with your fellow executives. What Barclays is going to be 5 years from now, 10 years from now. So what path is it going to be? Yeah. So
one of the interesting parts of our discussion that took a lot of our discussion is around technology and payments. Mm-hmm. Payments in many ways is the activity which ties the bank together, because we handle payments consumers to consumers, we handle payments consumers to business, we handle payments business to consumer, and we handle payments businesses to business. So it is, to a certain extent, the activity that ties together this wholesale bank and the consumer bank. And business and payments is changing dramatically. You get into a Uber car. You tell, he already knows where you, or she already knows where you want to go. He drives you to your location. You get out, and you've never touched a credit card, but you have paid.
So how do you take that, and you're good at that here in the UK, you're good at it in Germany where you run your cards business, you're good at it in the United States where you run your cards business. How do you turn that into a growth engine?
Well,
beyond what it already does.
I mean, realize that the type of payments or how you pay is multiplying. From checks and cash to now, a plastic card, a debit card, a credit card, your mobile cell phone. Do you pay through Visa or MasterCard or use some other channel or network? There are gateways to help companies manage all these different. So it's a very complex thing. Technology is changing it dramatically. And then there's a whole other side of the payments issue, which is also ground for a lot of work, which is fraud and cybersecurity, and how technology will play into that. So the payments issue and the technology issue is very rich. What I would say for Barclays, one of the interesting challenges that we have in the United Kingdom, where we are such a strong player in every aspect of the payment industry, we want to be an aggregator. We want to use that we are an entire waterfront of the financial market. We want to use technology to facilitate you moving along that waterfront. In the U.S., where we have a really, really good U.S. credit card business, that's the only slice right now that we are in the consumer side of the business. Do we use technology there to disaggregate, much like the fintech companies are doing, and see how we can expand that
into what? Where would you go from cards?
See. One of the
no, it's important because people need to have a sense of these aren't just pie in the sky ideas that Jess and company actually have some specific ideas about where they want to go.
Probably won't go into through the ideas, but one of the things I will tell you, which has been a fabulous program at Barclays, we have created what we call RISE centers. We have them in Cape Town. We have a number of them in London. We have one in New York City. We have one in Tel Aviv. And basically, they are very technology-driven places of work, where we invite startup fintech companies to come in and set up shop inside of a Barclays facility. And what we'll even do, we now in the UK have got 50,000 customers who have agreed to be guinea pigs. And they all know exactly what we're doing, et cetera, et cetera. And what we will do is we'll go to a fintech startup in one of our RISES program that shows promise and say, do you want to take what your application does and connect it to these 50,000 clients of Barclays to see whether it works? The idea for us is let's go front and center in front of all these fintech companies and see what works, and not walk away from them, actually participate with them, because therein someplace is the next new sleeve into the payments network and to the consumer and corporate business, actually.
The reason I'm searching for specifics is some of the shareholders, at the very least, whom I've talked to, don't see an easy path to growth, right? There isn't that much room to grow or take share from your rivals here in the consumer business in the UK. The US credit cycle is beginning to near an end. So losses in the card business will inevitably go up if the U.S. economy enters a recession. And your rivals in investment banking are powerful and unlikely to surrender market share to you very willingly. So they look at those dynamics and say, how's Barclays going to grow?
Well, one, the return on equity in our UK business is high teens. So it's a very profitable business. Mobile banking is changing things dramatically and changing what we can do for customers. One of the things about this payment business is payments also translates into data. We probably have perhaps the richest data pool of what is going on economically across the United Kingdom. Street to street, building to building, business to business. One of the challenges for us is how do we take that payment data, turn it into valuable information that you, our customers, can use for your benefit. And
that I'm prepared to pay for, in other words.
Yeah, that that you'd want to pay for because it makes your life much easier, or you get access to things that otherwise you wouldn't have. I mean, think of what technology is all about. Technology is about providing services that you never even knew about 5 years ago, and then monetizing the value that that brings to us. The data we have is an information source that we can create new value out of, and that's an incredible.
So that's
growth
one
market.
way to use
That's absolutely one way.
technology and payments
sure.
power.
For sure,
payments processing
and that's
power.
That's we're actually working with a retailer now in the United Kingdom where every month, again, we know how this economy pulses, street block by street block. We know when a building's lease has in it. We actually are working with a retailer across the United Kingdom now where we basically make suggestions every month about where they might want to open the next store. And what will its profitability be given the dynamics of the neighborhood around this one location that just became available? That's the way you can use financial data for important benefit for an important corporate client.
What about those other concerns? The U.S. card business may do poorly in a recession if we have one in the near future. The consumer business itself, is not a high growth business given that banking in the UK is kind of an oligopoly. And this issue of the corporate and investment bank.
People often ask me, are you concerned about the profitability of your corporate and investment bank?
Yeah, it's a fair question.
And the answer to that is yes. We're also concerned, when you have consumer businesses both in the UK and the US generating extremely strong levels of profitability, that's when you have to remind yourself that consumer credit is a very risky business. And so, so one of the questions as a management team is, given how profitable and how well we're doing with the U.S. card business, and we just picked up, part of the American Airlines account, which is one of the most important accounts in the U.S. As those businesses grows, keep in the back of your mind, unsecured consumer credit is a great business, but always around the corner there is a downturn, and put a couple of pennies away to make sure you're protecting yourself when that downturn.
Are you doing that now? Are you growing more concerned about the cycle?
We definitely,
in the United States?
We definitely look at that, and so yeah, I think you want to be thinking about downside when everything looks like it's only to the upside.
Right, when defaults are at or close to a record low.
That's right.
What about the corporate and investment bank? You point out that people raise questions about the profitability, and so they should, and that you as the CEO ought to be concerned about it.
Yeah.
How do you make it more profitable?
So we improved the return on tangible equity in the corporate investment bank from first quarter last year to the first quarter of this year by roughly 800 basis points, from 7 and change to 8 and change in terms of return. And I think the hardest part of corporate investment banking, which is that M&A activity that you do, underwriting equity for your clients and underwriting debt for your clients, we were actually up 51%. If you take out raising your own debt in the United States market, which is clearly the most important or powerful market, and with London a very close second, we were fifth, and I think had a very good and had a very good first quarter. I think once we are where we are now, let's do the right business for the right reasons, and not worry about where we are in league tables and whatnot. And if we focus on doing the right business in the right way, I do think the market is recovering in terms of the economics to the financial industry, and I think overall levels of profitability for the American banks and for a bank like Barclays will get progressively better over.
But that's a rising tide lifting all boats.
Yep.
Right.
Yep.
That's one of the ways that you can improve results. Right. The other way is by taking market share, and then the third way is by taking more risk.
No, well.
Maybe with disastrous results down the road, but
what I thought you were going to say, and I would have said the third way for us again is very much around technology,
cost,
and also technology in terms of what it does to your trading systems and how you manage risks, et cetera. It shouldn't. Well, it wasn't a surprise to me when I came to Barclays. The first 4 hires we made when I came to Barclays was Chief Risk Officer, Chief Operating Officer, Chief Technology Officer, Chief Data Officer. Because getting that core infrastructure is not only important for your payments business and your consumer bank, it's also very important for your corporate and investment bank. And we need to upgrade the technology of Barclays across the board, and that will have both a cost and a revenue impact in the corporate and investment bank. In terms of risk, we run, I think, very much of an agency model. If you look at the daily revenues of Barclays, our correlation is very high with volumes, to a certain degree, volatility. Our correlation to market direction is actually very low. So we're not going to succeed in the corporate investment bank by making a bet as to where the bond market's going to go.
Or on market volatility?
Well, market volatility does change the dynamic of your agency business. So, when you have very low volatility, everyone's going to get impacted. But volatility is a very different type of risk than direction.
So we're living in a very low vol environment right now.
Yep.
As you're well aware, people obsessed over the trading results in the first quarter. You attributed it to poor performance in the U.S. rates business.
That's right.
Is that business back on track? Is there reason for shareholders to be concerned about the results that trading is going to deliver in the second quarter with vol where it is?
What did Lloyd say about Goldman? Yes, we are human. Obviously it was a disappointing quarter for our rates business in the U.S. We have a new head of our corporate investment bank, and
Tim Throsby, right?
Who comes from the market side of the business. I think has a great history in the markets business. But no, I'm not concerned. I think I think what happened is as much. We beat consensus in basically every part of our investment bank in the four quarters of last year. This is the first time really since I've been CEO that we missed consensus on an important desk, and the market didn't like it. But I don't think it reflects some structural challenge that the bank has got.
Is it going to happen again?
I'm sure at some point some desk will miss somewhere for sure.
But what people want to be reassured of is that they're not going to get an unpleasant surprise 60 days from now.
But let's put it in this context. The unpleasant surprise was we missed, a 20% jump in earnings. There's no loss there. We didn't,
Right.
We didn't destroy shareholder value. We didn't do as well as we.
But your shareholders want you to be competitive.
Yeah,
and you want you to be competitive.
And we are competitive. And we are competitive. In the credit business, we had a great quarter, and in the M&A business, we had a great quarter. In debt capital markets, we had the highest market share in debt capital markets in the history of Barclays.
So. You mentioned Tim Throsby. He's now running the corporate and investment bank. Right. You've told shareholders to expect big things from him. What's he going to do? He looks at your equities business, which relative to other large broker-dealer institutions is small. At your fixed income business, how is he going to grow them? What's the plan?
Tim and I and others are obviously constantly going to be working on hiring and retaining the best talent that we can, because at the end of the day, banking is about the intellectual capital you have, not the physical capital you have. So the talent we have inside of Barclays is our first challenge.
And you want to hire more of it?
You're constantly hiring because people are constantly moving on. We're not a cult that you're not allowed to leave. So there always is a turn to a certain extent, but retaining and then getting the best talent. And we've recently hired some very good talent across Wall Street. And I would say one of the things that's also very encouraging is we can get good talent now, because I think people believe that Barclays has got a momentum to it and a commitment to a defined strategy, which is helpful. The other thing is we need to, and this is I think where Tim will be very constructive, between the corporate and the investment bank, we have a lot of risk-weighted assets. We don't need to increase the risk-weighted assets, but we do need to make much more efficient use of the risk-weighted asset level that we have. So looking loan by loan, relationship by relationship, how we fund the different portfolios in the bank, are we maximizing the efficiency of how we use our risk-weighted assets? I think that's right there, I think, is an important step in improving our business and improving the profitability of that business.
Would you liken Barclays' situation today and where you want to be 5 years from now to where, say, Morgan Stanley was 5 years ago?
I think we have, and I have tremendous respect for Morgan Stanley. I think they've got a great culture, and
Because they doubled the size of their equities business, right? They grew after a time when they were facing questions about the viability of their fixed income franchise. Nobody's asking those questions anymore.
Yeah, which is great for them. This model of having a wealth management business, and James Gorman, he talks about his beta business and his alpha business as being the investment bank. There is a similarity in the strategy. Again, we have the corporate and the investment bank here on the global stage, and then we have the retail bank and the consumer businesses of Barclays. I think hopefully the commonality between Morgan Stanley and Barclays is I think they've stayed the course, and they'll reap the benefits of staying the course. I think we're going to stay the course now, and we'll reap the benefits down the road of staying the course.
Let's talk about capital for a moment and return on equity. When you reabsorb the non-core business, the group ROE isn't going to look all that great. Where is it going to be? What's it going to look like? And where can people expect it to be a year from now?
Yeah, so that's why I did speak the other day. If you take the first quarter of 2016, the return on tangible equity was somewhere around 10% for the core. But when you got to the group results, after you
Less
put
than
NOR
6%,
core,
yeah.
it was almost down to 4%. So we lost 600 basis points. So the big question is, Jess, when you converge
Right.
the core with the group, i.e. you take out a non-core, because you put more capital back into the business, does the return on tangible equity go down to meet where the group was before, or can you improve the profitability of that returning capital so the group's numbers approach the core numbers? And what happened in the first quarter of this year? The core's return on tangible equity was 11%, and the group's statutory results, actually the Africa thing, was 9%. So the drag of non-core from 600 basis points to 200 basis points went all to the benefit of getting group up close to core, because we were able to take the capital that came back and deploy it in a very profitable way.
But on a reported basis, right? If you run those numbers through accounting standards, it's still...
No, on a reported basis, the group results, the issues related to the Africa sale, which is a non-cash, it's a very
So once that's all done, you'll be
So in the first quarter,
Yeah.
just take out that Africa accounting change. The group's statutory return on tangible equity was 9%.
The reason I say once it's all done, because that's where you want to be. So,
Oh yeah, well, we want to get that 9 to 11.
and that will be when?
I think we have a very good chance of doing that within the next, 6 to 18 months.
6 to 18 months. So that gives people a timeline to work from.
Yeah.
So is Stuart Gulliver from HSBC talking crazy when he says universal banks can't earn a return on equity of greater than 10%?
Let's see. We've gone through a massive regulatory change in the banking industry, and the banks have had to adjust their businesses and their models to get there. What I think is important is to have a healthy, growing global economy. The financial industry needs to cover its cost of capital. You cannot have.
And you will be at 11%?
I think our cost of capital is roughly around 10% today. I actually think what's happening in the United States, if you look at how the U.S. banks are trading, and this is a testament to certain to what Dan Tarullo said, about a couple years ago, is I think the cost of capital for the American banks is now into single digits. If you look at where they trade, what their profitability levels are, I think the cost of capital has gone down
Sub 10.
For sure, sub 10. And they're basically paying out, either in stock buybacks and in dividends, almost 100% of their earnings. So that's reinforcing the cost of capital, because now I think the market, given the regulatory environment, given the amount of capital there, is saying this is a pretty steady return on capital to us, and so the risk of that capital has gone down.
Where do you need to be before you can consider raising the dividend again?
We cut the dividend in order to accelerate the closure of non-core. We're doing that in June. As our chairman said today at the AGM meeting, we know we have an obligation to get our dividend back to more normalized levels for our shareholders. And at the right time, working with both the board and the regulators, it will be a topic of discussion. But let's get non-core done.
But is that a 6 to 18 month question, or is that?
I'm not going to sort of go beyond what I've just said. In terms of, we want to get to a more normalized place with our shareholders in terms of dividend policy. It is a board decision. You do that. You do that in consultation with the regulators. We had the stress testing here, just like you do in the U.S. So let's see how that unfolds.
What about costs? Once you've completed the restructuring and you're focusing on growth again, does that mean cost cuts are done?
In terms of changing the periphery of the bank, so we closed 9 countries last year.
No, I'm talking about operating expenses, the stuff you do every day.
So we set 3 targets when Tushar and I set out the strategy for Barclays a year ago. One was to get the group return on tangible equity to converge with the core. The second one was a CET1 capital ratio to get the end state there, and the third one was the cost income ratio. What we said is we would get the cost of income ratio down to 60% or better. First quarter of last year, that cost income ratio was 76%. First quarter of this year, on a group basis, cost income ratio was 62%. 76 to 62. We're pretty close. I think what we've been telling our shareholders is once we get to that 60%, I do want to invest for a while in technology. If you go look at the desktop computing at Barclays, our systems are Windows XP. The CEO of Microsoft the other day told me he doesn't think anyone knows about Windows XP anymore, and they've stopped programming that.
Satya Nadella told you that.
Yeah. So we will. It's already started. By the end of this year, we'll have 30,000 of our employees on Office 365 in the whole bank by June of next year. That's the sort of investment that we have to make to get Barclays on its front foot. And when we get to that cost income ratio, we're going to continue to invest in technology and operations.
So you don't look, for example, at the 14.4 odd billion pounds that you've spent on OPEX over the past 4 quarters and say, I want to reduce it by X%, or I want to limit its growth by X%. You think about it in terms of cost income.
Our target is that cost income ratio, but also remember, we have to pass CCAR in the United States. We're going to invest so that we meet all the requirements of the Federal Reserve. We have to stand up the largest de novo bank in the history of the United Kingdom, which is our ring-fence bank. We have to basically have that done by Easter of next year. That's an enormous expense and lift. That's in that $14 billion number. So to restructure the architecture of the bank to meet the new regulatory requirement is a lot of money, but once it's done, we can reinvest that money in developing things like payments technology, et cetera, et cetera.
And get those PCs on Office 365.
That's right.
Have you reevaluated the risk of Brexit to Barclays, given the hard approach Theresa May has taken and the similarly hard line Brussels has taken recently?
Politics is a very different world than business. What I would say is the level of dialogue with the Prime Minister's office, with her government, with the Chancellor, with the regulators has been really quite something. I think there's a lot of listening on both sides. We're a British bank. We're here to support the United Kingdom. But also, we're the largest underwriter of European sovereign debt. So France is very important to us. Germany is very important to us. As I said, we have a large credit card business. We have bankers and salespeople all across Europe. Continuing to engage with Europe is important for us. We think it's important for Europe. I think there are, just like having to set up the intermediate holding companies in the United States to continue to do investment banking in the U.S., the European Union is going to require us to set up structures across Europe that make it more robust and more within the fold of Europe. That's okay.
You know what I'm getting at, though? Does the hardness of Brexit determine how great the impact is on a bank like Barclays? Pardon me.
There could be decisions taken that might not be in the best interest of the free flow of capital. But I think one of the tenets of the G20, if there were a couple of things that came out of the financial crisis as a positive, one is, I think, the coordination of the G20. And one of the things that the G20 stuck to is, as we re-regulate the financial industry, let's not inhibit, by putting up barriers, the free flow of capital. so long as those barriers are not put up, there will be workarounds around Brexit so that London will remain a very important source of capital for continental Europe.
Relative to some of your peers on this subject, you're an optimist. At least you're constructive. What's the upside to being optimistic? What gives you that degree of confidence that they don't have?
Well, I'm just expressing what I think. So I don't think it's optimism or pessimism. It is what I think. And we have a bank subsidiary in Ireland that's got that is part of the European Union. We have 1,200 employees today in continental Europe, from Milan to Paris to Frankfurt to Madrid. There will be uncertainty. But having been in the financial industry as long as I have, it's amazing how creative the financial industry can be. Now let's just make sure we do it in a very safe and sound way.
There's less than a month to go before the UK election. Given the alternative, right, which we'll call uncertainty, would you say it's accurate to say that a decisive victory for the Tories, presumably, would be good for the British economy, good for the pound, and by extension, good for Barclays?
I don't want to insert myself, particularly as an American, in the British.
It's not about politics, right? It's about what's good for the bank. Because it's you could have certainty, or you could have uncertainty. If it's a decisive victory, there's some certainty there. The government has given everybody a pretty clear idea of the path it's planning to go down. Right. And if there's uncertainty, that could be problematic.
Obviously, a strong economy is good for Barclays, and certainty helps corporate investment, which is a fuel for economic growth. I'll say we enjoy a very, very constructive dialogue with the British government, and as I said, I've been very encouraged by the openness, by the candor, by the exchange of ideas and information. So, but who's ever in the British government, what's important is that Barclays stand behind the UK.
Jess, Russian meddling in the U.S. election showed us that there's reason to be concerned about the fairness and security of the democratic process there. Now, with the sudden removal of the FBI director, there are questions about the rule of law. You're an American, as you pointed out, who runs a big business in the United States. Do you worry at all about the pillars holding up the U.S. economy and U.S. capital markets?
No. I think I'm an American. I have incredible confidence in the institutions of democracy in the United States, and it'll be fine.